Good morning. This is February 3rd, 2023, and it's about 10:45 a.m. Pacific Standard Time. So, looks pretty clear to me the market is going down, and it looks like we've probably hit a temporary top. And so, like I said, I bought some options actually down here, and then I bought some more up in here yesterday. So I'm in the money now. The options I bought here are a little bit negative, but if this market continues down, then they're going to be in a positive. But the options I bought here are definitely in a positive. So I'm making money on this, and you can clearly see the Dow Jones is pretty much leading the way here. Never really broke out of this balance area. And NASDAQ is coming down too. So just focusing on the ES for now, getting in the market is one thing, but getting out is the other half. There's a lot of people saying that you can't find the tops and you can't find the bottoms and you can't time the market. But that's how I trade. I need to know where the tops are, at least close, and the bottoms in order to get in. And plus, I need to time it. Because even if the market does move in that direction, if I don't time it right with options, I can still lose money and still be right. And that's because options have a time value. And on top of that, if I were to buy put options down here, the market came up here, and by the time it came down to break even around here, those options would be worth a lot less than when I purchased it here. So I would need to time that. And sometimes, there's different ways of playing this game. Sometimes if you're not too sure, you buy some options, or maybe 10, 20 contracts, and then you wait. And if the market looks like that is the top and goes down, then you buy more. If you're not too sure and you buy those contracts and it comes up here, well, you might be losing on those contracts there. But by the time it comes here, then you can start, if you're pretty sure, you can start loading up. And so, reason why I was pretty close to sure here is because this market has already gone up pretty far. It needs to retrace at least halfway before it goes up again, if it goes up higher. And we are in a bear market, and I do consider this area here, let's see here, this area up here, the danger zone, because we're in a bear market. So this is a bull run within a bear market. I still think we're in a bear market, and this market's not going to take off up here. Reason for that is because the economy is in big trouble, really, really big trouble. And if anybody was trading back in 2007, you'll know that you can see the signs clearly. But of course, the general public doesn't know about it because, I hate to say this, but the Fed don't exactly tell the truth. And I can understand, because if they did tell the truth, everybody would be pulling out of the markets, and this market would surely crash. And they already know this market's going to crash. It's going to correct big. But they can't tell you, only because, like I said, people are going to be pulling out their bank accounts, maybe stop buying real estate, stop buying anything. They're just going to stop buying, and that's really bad for the economy. So they want to keep it going. And I know they talk about a soft landing, and there's no way we're going to have a soft landing. This is going to be a hard landing when it hits bottom. But the good news is, if you're aware of how these markets work and what the Fed's actually really talking about, then you can make some money. Because I trade up and down. When the market goes up, I'll trade it up. It goes down, I trade it down. A little bit more selective in a bear market when I go up. A little bit more careful when it's going down. Not too careful because, or not too cautious, I should say, because this has more of a tendency of going down. I talked about earlier, you have to time this. And even though in 2008, 2007, the market was already crashing, nobody knew about it until 2008. The general public just didn't know. But the people that knew how these markets worked, they knew. And so that's what I'm telling you now. I'm telling you ahead of time, because in 1 year from now, you're going to look back and you're going to see that these markets were actually, they continue to correct. They're not going up. We're not in the bull market. And if you prepare early, like I said, you can continue to make money. Like I said before, I showed you a chart what happened in 1929 when the market crashed. And as it crashed and the market went down, let's see if I can pull that back up. Okay, so 1929, the market came down and crashed. It bottomed out in July 1932. But if you notice, it just kept moving. You know, moves down, it moves up. It just keeps moving. It doesn't stop. Stock market does not stop at all. It doesn't just go flat. And as long as it keeps moving, you can make a lot of money. Look at this run from here to here. There's a lot of money you can be made. And I'm sure a lot of people, not a lot, but people that knew the stock market actually made a lot of money in this move here. And here's another big run here, you know. So, yeah, I mean, this is really a good sign. Okay, so the market is actually, this was bottom here, and it's gone all the way up here without really retracing. Now it did. It came up here and it retraced down to here and came up here. And I think that'd be great if this was a bull market, because that means it would come down here and then keep going back up. But since we're in a bear market, I don't believe that's going to happen. I don't think they're going to string this out too far. And I believe it's going to come back. So I don't, I know, well, I don't consider this an indicator, but this is a tool that sometimes I use. And this is what's called Fibonacci. You can look this up in the internet, what this means, Fibonacci. But pretty much the markets will retrace. If you notice, this market went up, it came down about 50%, goes up, comes down a little bit more than 50%, came up, and come down as much. So usually the markets will come down around this range of 38 to the 61% and 50%. Kind of sticks around this area. Like I said, if you want to look up Fibonacci, and then you can read about it and see why that happens. It's all mathematical. So if we go by this, which I kind of use this as a gauge, then this market could retrace about here, and then you can sell. So you made profit from here to here. Or you can wait till it gets here, or you can wait till it gets here. And I'm really not going to know until I actually, this is where the feeling part comes in. Like, what's the market doing when it gets to here? Does it feel like it wants to continue down because it just keeps having a limit down day? Then, you know, eventually those limit down days are going to retrace. So a plan could be that it gets down to this point, or even this point, retraces a little bit, and then comes back. So if it comes down to, let's say, this point, you can sell, and then when it comes back up here, well, I shouldn't tell you that, because this is how I play the game. You know, this is how if it comes down here, I sell, retraces, I'll buy back again. So I play these as a beginner. I think what you should do is, if you buy here, you'll buy enough of these contracts, put options that are pretty far out, March, April, even May, and then just hang on to it. If you think this is the top here, then you just hang on to them and just wait till they come way down in here, let's say. For me, I play a little bit different game. I kind of play the ups and downs in here, and in order to do that, you have to really feel these markets, you have to time it, and you have to know where the bottoms and tops are. And sometimes that's not easy to do. But for you, let's say you're just starting out, or even if you've been trading for a few years, you can just, if this market comes down to this line, you can just sell. And, the profit from here to here could be $1,000, it could be $10,000, it could be $50,000, just depending on how many contracts you bought. And let's say you made $50,000, that's a pretty good chunk of money to last you a little while, several months. And in the meantime, you're going to find some more opportunities, and then you can do that again. You can do this all year round and just trade like that, just little tiny ones. Little small trades. I can't tell you how to trade because you're going to have to find your own system. But for a beginner, like I said, if you just want to be very conservative, you can just wait till, let's say, it comes down here and just sell. And then just wait for another opportunity, whenever that's going to be. It could be next week, could be next month. The only problem is people get a little greedy. And if they make 50,000 from here to here just in a few days, they're going to want to make more. So I doubt if you're going to make 50,000 because you're probably not going to put that much in. But if you made $1,000, that's pretty good for now. You want to be consistent. You want to build good habits, and then eventually you'll go from making 1,000 to 2,000 to 3,000 on up. So again, I can't tell you how to play this market. I can just tell you this is what I did. I got in here because I'm expecting this to come down. Now I could be wrong. Next week it could go up, and then I'd have to get out with a loss, and then hit another top. At this point, it doesn't feel like that's going to happen. It feels like it's going to continue down, and this might take a couple weeks to get down into this area if it gets down this far, at least in the near term. So I know it sounds confusing. Again, you're just going to have to find your way of doing things. Just try to be conservative, and if you pick up $1,000 here, that's good. You just get out and just wait for another signal. All right, so that's the Fibonacci. That's a tool I use. And if you notice, like I said before, market comes up, retraces about 50%, comes up. This one retraced a little bit more than 50%, like around that 61%. Came up, didn't retrace here, not that much. So then it continued up to here, and then it retraced. And then if you look at the big picture from here to here, that one retraced about 50%. So now it's gone from here to here, and if this is going down, 50% is somewhere around here. And I would say that's pretty safe bet as far as, getting out at that point. And then just stay out and wait for another run. And if it comes back up here and it starts messing around here like it did here and it starts turning around, then you can get in again and then write it back down. That's one strategy. That's probably a safe strategy, I'd say. But I'll keep you informed on what the market's doing and when I think that we hit a top, just like I said here. Okay, so the market continues to go down, and we'll see what happens in the future. I don't really look at a lot of stocks as far as this is all based on the S&P, and I don't really look at the 500 stocks and what they're doing. Some of them are going way up, some are going way down, but I'm not paying attention to that as much because I think, what I believe, just from my experience, is these markets are controlled. I mean, there's no doubt that they're controlled. But the people who control them, they don't control every tick. What they're doing is they're pretty much steering the market. And they're not going to steer every stock. They're going to pick an index. The NASDAQ, the Dow, and the S&P are the big three. So all they have to do is steer those, and everything else pretty much follows. So I've been doing this a long time, enough to know, enough to where pretty much hits top, because like I said, this is a buy-sell game. So if people are buying here, now it's time to sell so they can start making money. You can't buy, and you're not going to make any money until you actually sell. That's the other half of the game. So that's why it comes down about 50%. You buy here, you buy low, and then you sell high. Comes down about 50%. You buy low, and then you sell high. Comes down. Anyway, that's how the market is played. It's always been played like that. It's based on the economy as far as how, like I mentioned before, if you buy a shoe store and you buy shoes, you're not going to sell them at cost. You're going to buy the shoes at your cost, and you're going to sell them higher. And once you sold it, now you've made money. But if you have a store full of shoes and you paid for them, you're not going to make any money. And that's what happens with people that go long term. They bought and they did not sell here, and they're still hanging on here. And they see, oh, the market's coming up, it's going to come back up, and we're going to make money. Yeah, sometimes that happens, but in the bear market, probably not going to happen for years. It's going to continue down. And then what happens? They lost all their money. If they didn't sell, you can technically say they didn't lose money, but actually they lost all that time, and by the time they do sell, if they do, all that time that's wasted, could be 20 years until it comes back. Now you got to contend with inflation, and you got to pay taxes. So you just wasted 20 years. All right, a lot of that sounds confusing. Once you start getting involved in this and start learning more about the economy, you're going to see how this game is played, and that's exactly what this is. It's a game. I'm going to leave more links below. It's just for educational purposes. I really believe that everybody should know about how the money system works in this country, all over the world. In fact, it should be taught in schools, but they don't teach that. Even if you take an economics class, they don't teach this stuff, okay? So I'll leave some links below. If you want to look at them, you want to educate yourself, you'll be more informed on this. Just keep in mind that some of this stuff may sound very negative, and it is negative, but you want to try to ignore the negative part and just absorb all the information enough to where you know what to do. But a lot of this negative stuff is only for people that aren't informed. If you're informed, it's not negative. It's just, that's good that you have the knowledge. Now you know what to do with that knowledge. Okay, so I think that's it for now. There's nothing else to do. I mentioned before, there's some people that sit in front of their computers for 5 hours a day because they're day trading, and other people are just watching and analyzing. I don't do any of that stuff. After this, I'm pretty much going to walk away. I have my alert here, so wherever I'm at, let's say this market takes off and comes up here, I can decide. I can do it on my phone. I already have the plans in my head, and I just walk away. I can go to the gym, I go for a walk, do all kinds of stuff, and that's it. I'm done. There's nothing more to do here. It's that easy. And now I just wait. When it comes down to a point, I sell, and then I wait till it hits another point, feel that, maybe that's the top, get in again, and then I just keep repeating the same process. You don't have to spend a lot of time in front of a computer unless you're learning. And that's what I'm going to do. I'm leaving some links down below, and you can learn through that. But I urge everybody to learn, because this is important. Money, you can't do anything without money. And if you're broke, it's your life is miserable. I've been there several times. I've been in debt hundreds of thousands of dollars and been broke 2 or 3 times. I had nothing, zero. and it's not a good feeling. So that's what's going to happen when this thing starts hitting bottom. That's where a lot of people are going to be. But not you, because you're going to be educated. Okay, so that's it for now. We'll talk again this Friday. We'll talk again on Monday. We'll see where this market goes. I'm guessing that this market's going to maybe come down a little bit, maybe not, and it might sit here for a little while. And maybe next week it'll start coming down. So we'll see. All right, talk to you then.